Yo, what's up, everybody? How's everybody doing? Let me know if you guys can hear me. We have unemployment claims right now, guys. So let's just wait for the next, candle closure in the next 10 minutes. And I'm going to call out some trades. We are also 1-0 last night in the signal room again as well. We were able to catch about 30 plus pips with a position that I sent out. But let's delete all these markups, guys, and let's start fresh today. We are in the middle of news right now. It does look like we're gonna melt. Depending on how those numbers come out, is depending on where gold is gonna be going, right? But obviously with FOMC yesterday, we did push very, very high up, right? We were extremely bullish with gold. So, like always, the market's always gonna move in three directions: up, down, sideways. It's either gonna continue up, with this new statement for its continuation upwards, or it can have some pullbacks and retracement to mitigate all these previous, imbalances and candles that it left, on the left side. But, let's start marking up some zones that we might be able to take trades off of. For example, we do look like we're trying to break this level right here of 2030. 2030 is also a very strong psychological level. And, if we go to the past, it's also been a major resistance level in the past, as you can tell right here, right? So, does look like the market is now retesting that level. We might stay above it. If we stay above it, we might be looking for buys. If we do break below, then we are looking for those safer sells. Let me know if you guys can hear me in the chat, guys, just so I know that I'm not talking to myself. Now, the other probability or the other zone that we might be able to take trades off of would be, I'd say, 2035, right? 2035 can be a level. Let me see. It's either this one right here. Yeah, this one does look like a nice little level. You see? Or we could move it upwards, right? No, I like that one. Okay, yeah. Or we can take trades off of that level as well, because there's been a previous resistance supporting the market. Market breaks above it, we'll be above our SMAs as well. So that actually looks like a pretty nice area to buy off of if we do decide to break above that level. Now, target zones that we can target would be, if we do take buys above 2034, we can take our first TP at around 2036, right? But around this area right here, where it's also been an area where there's been a bunch of wicks rejecting, and it's also been a support in the market. Another nice little area that we can potentially target would be 2038, about right here, which has been the top of these highs. 15-minute time frame. Let me adjust it. It's also been a very strong resistance. Very nice levels that we have marked up, guys. Then ultimately we can target these highs up here, right? But that's only if we do decide to break up. Does look like we are breaking down right now. 15-minute time frame does look clean, but 30-minute does not look as clean. Due to the fact that there's not a lot of data, right? That huge move happened, right yesterday, and right now it's technically when it's forming the range. So this might be a fake out. That's why I don't want to rush into any trade right now, and I don't want to get into any positions while in the news, because it might just be a fake out. There was a lot of volume and volatility yesterday, right? And if you guys know how the market moves, it usually just has one day out of the week where there's a lot of volume and volatility, and that day I believe was already yesterday, right? Today might be a slower day. Hopefully it's like I'm saying, and if it's not a slower day, then we should still be able to capitalize off of these trades because I'm marking them up, right? But if we do decide to take buys, or sells below 2030, we can already potentially target this target zone right here of 2027. Would be a beautiful trade, 30 plus pips. Then we also have this other area right here at about 2025, which would be another potential setup. Ultimately, we could see the market dropping all the way down here to 2015, but what happened during the stream today, I don't know. We gotta see, depending on how much volume there is in the market, right? And how those new statement data comes. Now let's look at the DXY. Let's see what the DXY is doing, because if gold is gonna push down, we gotta see the DXY or the US dollar pushing up. DXY, ooh, what's going on here? Okay, it's pushing up, right? The dollar has to break this area right here for us to push down on gold. You see, 15-minute time frame. Yeah, so the DXY has to break above those highs. We gotta get a closure, 15-minute or 30-minute above those highs for us to be able to actually push down on gold. And if we do want to see gold push up, dollar has to break below these lows. Remember the inverse correlation that I've explained to you guys in the past live streams, you know. All right, beautiful. Gold's back inside the range that I wanted it to be in. That's amazing, meaning we won't miss on any positions or any trade setups. But we do have, you know, we are inside of news right now. Let me see how the numbers are coming out right now. As you can see, you know, 8:30. We have core retail sales, unemployment claims. Unemployment claims do look like numbers are coming out positive. Actual lesson forecast, good for the currency. Positive numbers mean negative gold. Negative numbers mean positive gold. Remember, inverse correlation with the DXY. News is for the DXY, and gold moves, you know, opposite to the DXY or the US dollar. Okay, perfect. Yo, do you think it's a liquidity grab? Yeah, 100%. Fake outs are liquidity grabs. You know, it's just a different terminology, but at the end of the day, fake outs are liquidity grabs. When there is no candle closure below an area where we want to take sells or buys off of, that means it's just a wick to grab liquidity from the left-hand side, which is exactly what happened here. The market shot down below the range to grab liquidity from these lows, and these lows. So 100% it could be a liquidity grab from this area. Now, that's exactly why we don't enter those trades, you know. For us to actually get into a new zone where, you know, we already understand the market moves from zone to zone, we gotta get a candle closure breakout, you know, below those lows, technically telling you that, all right, it already grabbed liquidity, but now it's gonna go and target the next zone. And in this case, it didn't do that. It just shot a wick and continued its way up, meaning it just grabbed liquidity, but it's not claiming that zone. So it's not gonna go to the next zone, which is down here, or the next one that's down here. It's just probably gonna stay inside the range and do some more manipulation or, you know, some choppiness. So yeah, 100%. That's basically a liquidity grab. I just call it a different name. It's XJY, by the way. What's up, man? Thanks for hopping on the live stream, bro. I almost closed my my streaming software by accident. Okay. Buys above 2034 would be very, very effective. You know, we just gotta see what the market ends up doing. Also, be above SMA, so it'll be a pretty safe trade. You know, we can take some nice little scalps. The only thing is that if we do break above this range that is forming right now, we'll be going into range 2, which is this one up here, which can take us some time to hit our TPs. But you know, let's end up seeing how the market moves. If we do enter buys on 2034, stop losses can be at 2032, 2031, which would be at the bottom of the range. That's perfect. 15-minute just closed. It's 8:45. And it's inside the range. It's not bad. Okay. See the 30-minute. We get 30-minute in 15 minutes, so. We got a nice little breakdown. How's everybody doing? Good morning. London is better for impulse moves. Okay, so I used to trade London before trading New York. But the reason why I moved away from London session is because it doesn't move like it used to move. I agree with you, right? If we were talking about this 2-3 years ago, right? For the past year, London hasn't been moving the same way it used to move back in the days, right? It's usually taking longer to react. back in the days, right at London Open, which is at 3 a.m. Eastern, you would potentially grab a big, expansion or a big move up or down outside of a range. It doesn't happen anymore. Now, the move would happen at 4 a.m., 5 a.m. It would really basically happen at random times during London session. So what would happen is I would just be up all night for no reason, looking for this move that sometimes didn't even happen. So I would just be up all night, losing sleep for no reason, right? So, I understood that the market has been shifting into, new time zones, or it's been moving a lot different. So I just, I just decided to go to New York, right? Which is what I'm doing right now. And I have realized, with like my sessions indicator and, doing some back testing, that it has been moving a lot more during New York recently than during during London. So I stopped taking trades during London session. Back then, I agree. It used to move a lot better. It was cleaner. It moved in one direction. But unfortunately, it just doesn't do it anymore. Right? It doesn't move the way I used to like it. Yeah, London is complicated. I can't wait for my 2024. Has to be a breakout year for trading. Bro, 100%. 2024 is going to be great for all of us. But we have to make it great. We have to make it a good year. Don't expect anything from the markets. Don't expect anything from anybody. Expect yourself to become great. That's how I see it. But London session was super easy, man. To be honest, pre-London, it was just basically be the Asian range. You would trap price inside the range, and then you would just catch the breakout of the highs or of the lows, and that's it. It would just go in one direction, but it doesn't do it anymore. And it would move, bro, like 40, 60 pips back in the days. Now it struggles to give us 20 pips. New York session is better for now. I guess maybe it may move to London again. Yeah, it depends. It also depends on the time of the year, right? I believe the months and the time of the year has to do something with it as well. December is usually very choppy due to the holidays. All the high impact news that are in the beginning of December as well, like we're experiencing right now. And it's just, December is a weird month, right? It's never really been my best month, but thankfully this year we're actually winning. We're still in the win streak with the Signal Room. We're in a 6-trade win streak with the live trades. So overall, we've had a pretty decent December. I just feel like if it wasn't December, yeah, we would have continued the win streak, but I feel like my trades would have been better. It would have been, higher probability setups, and we would have been catching a lot more pips. If you realize, yeah, we're still in the win streak, but, they haven't really been huge trades. There's been like 20 pip trades, small little trades like that, which are still obviously winners. But, I just wish I was able to give you guys bigger trades. It's not possible with the current market conditions that we're currently facing. January is more clean. January is pretty similar to December, because now remember, January is really the first month of the year, so they have to create liquidities. The banks, the institutions are all getting involved now. It's pretty similar to December. I'd say February is a really good month. March, May, like all the months in the middle of the year are really good months. May of last year was the month that I made one of my biggest withdrawals last year with May. Yeah, I believe it was a $50,000 withdrawal. Right, we're trying to break this area right now. I don't want to take impulse position, guys. I want to get a candle closure, right? We can hit TP like we're doing right now, but I'm not going into no trades. If this has to be an educational Zoom, an educational live session, well, let it be an educational live session. At least you guys are still learning. But, I want to give you guys high probability setups, and I don't want to lose the win streak either, right? I'm not here just to call out random trades. I'm here to call out the best trades. That's what I'm here for. Yeah, so as you guys see, yesterday the New York session, look how the market pretty much expanded in one direction, right? That's like something that I would want to see today. Just overall, I don't really want to see too much volatility, too much volume. Regardless, brokers are not going to let you operate in those conditions, right? You're probably going to get slipped out. Spreads are going to be insane. And it is, I want to just get a clean market where we can catch at least, 40, 60, 80, 100 pips. I have a high success rate in catching those liquidity grabs. Continue being patient and calling the best trades. 100%. Thank you so much. And that's where it's at. It's about being patient. Now, again, I wasn't patient my first 2 years of trading, but I believe that's one of the reasons why I wasn't as profitable. I was able to develop this patience throughout the experience and years of me trading. That's the good thing about putting relaxing music in the background, right? I can be more patient. Now, if I were to play some loud hype music, I would probably be impatient and I'll be going into any trades. But, we're playing some chill, low music in the background. We're more relaxed, so we have more patience. It's all about psychology. All these little things matter, I'm telling you. All right, we get 30-minute candle closure in 7 minutes. If this candle actually breaks above my SMAs, we might start looking like we are flipping bullish, and I would want something like this where we can break above SMAs, close around this area, probably give us a nice little break and retest and continue pushing up. That's a probable move that could happen. Let's get this live stream to 20 viewers at least, guys. Let's go. Do you see the markets better on a beach or some nature surroundings? So that's a good question. I've never looked at the markets in a beach, to be honest. So when I go out to the beach, I like to not be looking at the markets. I actually prefer being free from it. At the end of the day, trading brings freedom. And I pretty much really only do breakdowns and look at the market for 1 hour to 2 hours, not more than 2 hours. And that's usually at around 7, 8 a.m., 9 a.m. when I'm doing the live streams or I'm sending out signals, right, during pre-New York to New York session. Then throughout the day, I really do not look at the market anymore, right? Especially if I'm not in a trade. If I'm not in a trade, I'm not going to look through the market at all. I enjoy my freedom and I enjoy, what trading is able to give us. So when it comes to looking at the market in a beach, I've never done it, right? Now, when it comes to nature surroundings, yes, I've traded in parks before. I've traded, with the nice little breeze at a Starbucks, drinking coffee. And I'm not gonna lie, I actually enjoy trading more when I'm home in my office here. I feel like I'm just more focused. And I'm already used to this, these conditions, right? But yeah, hopefully that does answer your question. But I mean, everybody's different. If you trade better at a beach or if you trade better, with nature surroundings, that's probably good for you, man. Never tried the beach. Nature surroundings is good, but I feel like I do trade better when I'm home. 100%. Wow, this candle's just pushing up right now. So let's see if it does the same thing that it did with the previous candle, right? It did a liquidity grab down here. It's probably going to do a liquidity grab to sweep liquidity from upwards. And then we probably might not know where the market's going to go, if I'm being honest with you. Because if it grabs liquidity from both sides, then it probably is just going to be a gamble, right? We got to get more confirmations as time progresses, right? Let's see what the DXY is doing. Doing negative numbers, also pushing down, which basically is making gold push up. But as you guys can see, It also did the liquidity grab towards the upside on DXY, which is the same liquidity grab that we saw on gold, but towards the downside. Just remember the inverse correlation that both currencies have. If a beach is all you got, go for it. Yep, 100%. I mean, I live in Miami, so we have really good beaches here. I think probably one of the best beaches in the US. The US is not really known for having beaches, but you know, at least you know that I know of, right? I mean, I've gone to the beaches in California. They're not better than the ones in Miami, right? I think like the water, the sand's darker, it's more rocks. I don't really like that. Now the beaches in Miami aren't as good as island beaches, but I mean they're still good. You know, they're not that bad, but I don't know. I don't think the U.S. has really good beaches. But yeah, like Jeremy said, you know, if that's all you got, go for it. It'll probably help you, you know, with your trading, especially if you're not profitable, because it would get you in a mindset where, okay, you're trading in a beach, it's gonna trick your mind to already think that you're kind of profitable already, because you're already living that freedom that trading gives you. So it might actually help you trade better, right? It will affect your psychology, at least in a positive way, I believe. But again, every human reacts different to different circumstances. Okay, gold's pushing up right now. We get 30-minute candle closure in 2 minutes. Let's see what we get. I mean, to be honest, it just looks like a huge, big range, right? We could say that this was range 1, but it wasn't really a range, right? We just saw one small candle, part of a candle here, a little doji, and now it's pushing up, and then we are forming range 2 here. But when you really look at it from a bigger scale of time, you know, it's pretty much just been one big range, right? Which I don't like. Now, if we also were in a bullish, you know, consolidation, these lows right here wouldn't have been formed, right? Because this is what we would have been seeing, right? Something like this, where we would have been respecting this area, but we didn't. You know, we broke below it here. So that's another thing that you guys can consider, right? Especially if you're going in for the buys here. There's this, you know, candle here that closed below these lows. So it's a little scary sight right now, but let's see what ends up happening. Right, we get candle closure right now. Back inside the range or inside the channel. Now we're gonna probably grab these highs up here. Let me see something from 37. Excuse me. $20.40. Yeah, be careful here, guys. Because we could push back down, you know, to grab these lows down here as well. We have two outcomes, right? We either push up to grab this area, or we push down to grab this area. We go into the buys and it comes this way, we'll be hitting stop loss. And if we go into the sells but hits this way, we'll also hit stop loss. So you got to look at the probabilities, you know, of each setup that you're going to be going into, right? I'd say just let the market evolve right now. You know, not do anything. Let it do its thing. We're pretty much still early. Like I said, you know, unemployment claim news that happened 30 minutes ago was just a manipulation to grab liquidity. That's pretty much all it was. As you see right here, it just shot this wick down to grab liquidity from the left-hand side and probably continue its way up, right? So, you know, let's see. If you look at the 4-hour time frame, we don't even have a range, right? We just have bullish candles pushing up constantly. So it's currently trying to grab liquidity from this whole range here, but probably gonna happen the same thing right now here. Remember, history repeats itself, right? So as you can see, there was a range here, right? And there was also a range here. Now what we're seeing is most likely a range forming around this area, right? What this range is trying to do is trying to grab liquidity from this range right here. And if we continue pushing upwards towards the expansion, then it's going to most likely target this range that we had here as well. Remember, there's liquidity up on the top of this range from all these highs, and there's also liquidity from this range on the top of all these highs. What is the market doing? Remember, the market moves from zone to zone, grabbing liquidity. So it's most likely going to try to grab liquidity from this zone, which is exactly what we're seeing right now. These highs right here are actually, you know, the body of these candles are higher than the body of all these previous candles. So what we might see is the market might shoot some wicks up to probably just grab liquidity and continue its way down to fill all these orders that were here, right? The market is not going to let a bunch of buyers get away with this, right? Eventually, you know, some of those buyers are going to get greedy. Some of them are going to don't have stop losses, and the market's going to push right back down to stop all those people, grab liquidity from all those people, and then ultimately go into where it wants to go, which is upwards. But for now, what it's trying to do is grab liquidity from the left-hand side to get volume again, right? The market needs liquidity to grab volume. Without the liquidity, it's not going to have the strength that it needs to, you know, create expansions like it did here. The reason why the market had that strength is because it grabbed all the liquidity from this range here. Once it grabbed the liquidity, it already had the strength and power to break above and continue all the way up. Now what it's doing, now it needs to kind of recharge, right? And how is it going to recharge? By getting liquidity from these areas and from these areas, which is what we're seeing right here. Now, possible outcomes is the market shooting up some wicks to grab liquidity from here and possibly ultimately push back down, because like I said, it's not going to let traders get away, especially the buyers, get away with this. So yeah, that's what I see, right? That's what I'm seeing right now in the market. For those of you who like the way of trading that I trade, you know, it's very different from a lot of these traders and YouTubers. The way I learned how to trade was literally based off of experience and time in the market. Like, I would lock myself in for hours studying on how gold moves and studying how the Forex market moves. And, you know, I came into my own analysis and conclusions on how the market moves. And, you know, it respects my analysis a lot. You know, that's why I've been profitable for the past, you know, 3 years. We're currently in a win streak right now with the Signal Room. We're in a win streak with the live. You know, I've been able to make multiple 6 figures using the same strategy. So does it work? 100% it works for me. Does it work for you? You know, we might not know unless you try and check it out. You know, and how do you try and backtest a strategy? Well, you know, give it at least, I'd say, 2 to 3 months of backtesting that same strategy, and then you'll be able to calculate a win rate, and, you know, you'll be able to see if you're actually profitable or not. But I do believe every strategy and any strategy works. You know, it's just, do you work using that strategy? You get me? Okay, so we're going above these highs. Look, if we would have entered those buys down here, we would have already hit, TP3. But they were risky. Again, we didn't get the candle closures that we wanted. So it just shot right up. But yeah, if we would have entered down here, we would have been up already about 50, 60 pips. But it's okay, guys. There's always going to be another opportunity in the market. I didn't like that position. It's super, super risky. The candle didn't even close above our SMAs. Right? There was literally no confirmation of the market pushing up. It would have been a gamble. And we're not gamblers here, we're traders. I'll be right back, guys. Give me 1 second. Alright, I'm back, guys. Nothing has changed. It's doing what I told you guys it was gonna do. Reason why you're successful, you're disciplined. 100%. And you guys wanna know a cool story? You know how I developed that discipline? It was actually by working out and going to the gym every single day, even when I didn't want to. Right? Because when you do something, right, that you don't want to, for example, you go to the gym. But you go to the gym, most people go to the gym because they want to work out on their bodies, work out their muscles, and overall look fit. But by doing so, by pushing yourself every single day to go to that gym to work out your physical body, you're actually working out your mind, right? Because you're forcing yourself to go to a place that it might be a struggle to you to go. Doing so is building up your discipline, right? Unconsciously is building your discipline when you go to the gym every single day when you don't want to. You think you're just working out your body, your physical appearance, but you're also working out your mind. And then that same way, that same outlook that I had into fitness is the same outlook and the same approach that I took into trading. And that's why I also recommend traders to work out daily, also get some good sleep, get good healthy habits. It'll definitely help a lot with your discipline and your psychology in the markets. 100%. How do you build up good daily habits? By removing bad ones. You replace a bad habit with a good one. That's how you build them. So it looks like we already grabbed liquidity from the highs. Or at least we're trying to. Hopefully we get some rejections. Regardless, I think we can also take some buys above that area, guys, above 2040. Now, they'll probably be riskier because we don't really have any target zones upwards. It will just pretty much be like a free range to target. We can take some buys above that area. Now, we'll need also a candle closure because it'll be the breakout of the range. But again, we're also very early in the range, so we don't know if that's going to be officially the breakout of the range. You get me? So for those who are in the live stream, no trades have been taken yet. Markets has been very choppy today. You get the next 15 minute in 1 minute, but you know we're far away from both areas that we would want to target. So if gold does push back down, I would be taking some risky sells below 2034. Yeah, this channel was not respected. It's starting to look cleaner now, right? But at the end of the day, it's just one big range. Yeah, guys, it's literally just one big range. If you guys have any question, you guys can drop it in the chat. Yeah, we got the next 15-minute or 30-minute candle in 12 minutes. That's nice to know what gold has at least one day of the week that it would make a huge move. Yeah. It usually, I mean, the market has those huge moves when there's news, right? When there's high volatility like red news. Usually it's those FOMC days, or, you know, it also moves a lot during CPI. But it's just one day out of the week that it really expands or moves like that. When there is less volume, would your strategy trigger more often or lower time frame? So we want volume, you know. We would just prefer to have volume where we can catch good breakouts off of, right? And the higher the time frame, the more probability that we're getting a real breakout and not just a fake out. So if I were to get, for example, right now, since I'm waiting for the 9:30 candle to form, right? If I were to, let's say it's 9:30 and a new candle just gets formed, I would most likely look at the 30-minute time frame and not the 15, because the 30-minute is really gonna indicate me if that's a real breakout or not, right? Because, for example, if it did break a zone in the 15-minute time frame, but it didn't really break a zone in 30-minute, then yes, it's still a breakout, but it's a 15-minute breakout, and 15-minute breakouts don't have as much strength, or, you know, aren't gonna give you a high probability setup like the 30-minute is. You got me? The 30-minute is a way better time frame to go and look at your confirmations from. Then, you know, of course, I would also look at the 1 hour time frame, which is stronger than the 30-minute time frame. And I don't really look above the 1 hour for the breakouts. I feel like the 1 hour is like the ultimate, you know, confirmation. If you're able to get a candle breakout above a range or above one of the levels that you're currently looking at in the 1 hour, then that's a very, very solid confirmation. Then, of course, you add all your other confluences like trend, SMAs, and everything else that you use to trade. But yeah, if you're able to get, you know, the candle closure breakout in the 1 hour time frame, then that's like the strongest confirmation you can get, and you're most likely gonna get a high probability setup. And not only that, but it's most likely gonna be a bigger move because you're looking at it from a 1 hour time frame. It's not just a 15-minute time frame anymore, right? There's a lot of noise happening in the 15-minute time frame, but it's also smaller moves. The reason why I look at the 15-minute time frame during the live streams is because we pretty much only have like an hour and a half or an hour in the live streams. So, you know, we'll be able to catch, we'll be able to have a higher probability of sending out more trades due to the fact that, you know, inside of 1 hour, there's 4 15-minute time frame candles, but only one 1 hour candle. If I were to just look at the 1 hour candle, we would only have probably time to look at one trade. And if we don't get a breakout, then there's no trade. But with the 15-minute, you know, since we got 4 of those candles, we might have, you know, more chance of us taking a trade during the live stream than if not the 1 hour, you know. But yeah, that's basically how I look at stuff. And then the 30-minute time frame is very, very, very nice. Do you have 4 to 5 separate entries with the stop loss send T and with the stop loss and TP set? Right now, bro, I'm not looking for anything. I do have multiple types of setups in my playbook. I'm gonna be releasing all these things soon, bro. For 2024, it's definitely gonna be a big year. But I do have different types of setups. I don't have just one setup. I do have different setups with different plays in my playbook. And usually my stop loss, I would prefer to have it 20 to 30 pips, not too tight, not too wide, 20 to 30 pips. And preferably above or below the previous candle closure, just so the market can breathe and do its thing, you know. And when I set my TPs, I usually try to aim at least for a 1-to-1, and if not a 1-to-1, you know, at least move your stops to break even so it can be a risk-free trade. But at least a 1-to-1, then a 1-to-2, 1-to-3, potentially sometimes even all the way up to like a 1-to-5, which my 1-to-5s are usually like 100+ pips. And are more into like the day trading type of positions and not scalp. I hope that answers your question. If not, you know, you can just ask again. But yeah, I have a lot of things coming out for 2024. You know, I'm gonna be releasing a free course December 25th for Christmas. I'll open up a few spots for my signal room again since there is a wait list and my enrollments are closed. I'll open up 25 new spots on December 25th. The free course. Then for next year, I'm also going to be dropping, hopefully, you know, it's in the works for it. I don't want to be really spoiling it right now, but you know, there's some apps coming out too. You know, some big things are coming right into the industry. So yeah, those apps are going to be coming out. Obviously, I'm going to be doing a lot more live streams, a lot more free content for all of you guys on YouTube. And overall, I just want to bless the community. You know, trading can get very, very boring when you do it by yourself. So, and one of the things that has helped my psychology and has helped me, you know, remain profitable and remain sane in the industry is all of your help. You know, you guys, the motivational messages you guys sometimes send me in DMs, you know, the thanks, all the students that I mentor, you know, seeing them get profitable, you know, that helps me out as well, you know, because, you know, I can make money, but the realest thing a person can do is help others make money as well. And then seeing their reactions. I like strategies that permit me to set price to trigger. It helps to catch more pips and gold moves quick sometimes. Yeah, 100%. You like strategies that react to price and not predict, which is exactly what I do. I don't like predicting price because at that point you're basically just assuming that price is going to go in one direction. And at that point, you're also gambling, which I don't like, you know. I like to trade what I see, not what I think or feel. And that's exactly what I do. And that's why I wait for breakouts. Because with a breakout, you know, you can see in your screen that it broke out and you're actually seeing the candle. And we already all understand that no matter what strategy you use or what concept you use, we understand that the market moves from zone to zone. When the market breaks one zone, it's going to go to the next zone because that next zone has the liquidity that the market needs for it in order to move. And the market moves from zone to zone. Each zone is basically liquidity, but in different terminology. That's a big confusion that goes on in the industry as well. A lot of these traders, they have different names for all these other things, but at the end of the day, they're all very, very similar concepts. Just a lot of these traders just name it different things. You know, some traders call it support and resistance. Some traders call it order blocks. Some traders call it, you know, supply and demands, or, you know, key levels. At the end of the day, they're just target zones or areas in the market that the market is either going to reject or tap into, right? That's how I see it. At least that's how I believe the market moves, and it's what's worked for me. And like I tell all my students, there's no wrong or right way of trading. If you're able to make money in an industry where 99% of people fail, you're doing something good, right? You're doing something right. Even if you trade the weirdest strategy and the weirdest formation that nobody has ever heard of, if you're able to make money with that, you're doing something right, because you're coming into this industry to make money, right? Then you're doing something right. Yeah, using buy limits, etc. So I don't use limits because with a limit, you don't really enter off of a candle closure. You're pretty much just entering once the market taps into it, and it could just leave a wick. I prefer using buy stops and sell stops. Buy stops and sell stops are super effective, in my opinion. We're getting 30-minute closure in 2 minutes. Really, nothing has happened, guys. Do you guys want a quick scalp? Drop a yes in the chat if you do. It's gonna be a risky trade, right? But if you guys want me to send out this scalp or this quick, you know, possible 10-pip move, you guys let me know, then I'll send it out. Because if we do break below these lows, then we can potentially target these. And then from here to here, it'll be like 10 pips. You see? It'll be like 20 pips. But it'll be a super risky trade. Let me know if you guys want that. What's the difference between stops and limits? There's a difference. Buy stops and buy limits. Yeah, 100%. With a buy limit, the moment that the market, let's say you place a buy limit at 2041. The moment that the market taps into it like this wick did, you would have been triggered into your position. And look how it just went back down. You would have probably hit stop loss because of that. With a buy stop, the market has to continue pushing up, then push back down to do like its retest, then to continue back up. And then you're going to get triggered into your trade. So that's why I prefer buy stops. I'll send you guys a PDF in next week's live stream so you guys can understand that a lot better. Yeah, buy stops and sell stops have a higher win rate when it comes to trading. I just feel more confident taking them. Because since I always wait for candle closures, you know, I prefer getting the buy stop. Even though there's no position that actually, you know, triggers when the candle closes. Because at that point, you know, you'll just be, you'll have to get nerfed. The market has to nerf your strategy some way, right? It's not going to just give you a secret sauce like that. You know, it has to. Okay, so we didn't even get a candle closure below where we wanted, right? We literally just had a smaller candle than the previous candle. No volume right now. Damn, that's nice. Yeah. Buy stops and sell stops are... I use them a lot when I'm not in front of my computer or when I'm not live streaming, right? When I'm just like, you know, I'm outside, all I have is my phone, and there's a potential move that could potentially play out. I'll send out a buy stop or a sell stop to my signal room. And within a few minutes or hours, you know, it'll get triggered and we'll be hitting all of our TPs. But if I'm present in front of my computer and I'm looking at my setup, I don't really need to be sending out buy stops or sell stops. I'll just be quick and send out the signal and enter the trades while I'm looking at the charts. Buy limits work better for slow Forex pairs. For gold, not good. I'll have to see. You know, it probably does work a lot better with Forex pairs. I know it didn't work with GJ. GJ is super quick. With GJ, you have to send out stops. You can't be taking limits with GJ, especially nowadays where it has a lot of fake outs. All right, so it's 9:31. We didn't get a candle closure. No trades have been sent out today. Remember what I always tell you guys: a no trade day is a winning day. Thank you for all the explanations. 100%. You know, I'm here to teach you guys. If I can't call out a trade and, make you guys some money, at least I'm gonna be, teaching you guys so that you guys can make some money on your own. And there's always so much to learn about trading, right? It's not just, making money. It's like a whole new world. It's a whole new language. There's always something new to learn. And what I tell people is stay educated, right? You might not, trade everything in the markets, but at least know about it. And by knowing all this information, you can avoid losses and you can improve your profitability rate or your win rate, just by knowing information that probably other traders don't know. We got some random bullish volume right now towards the upside. Is there any news right now? It's 9:30. Okay, no, we don't have any news. Yeah, we're done with the news. Unemployment claims already happened. If you had your buy stops above 2040, like I advised, yeah, above 2040, you should be triggered in. For those of you that missed out, you can enter at 2041. 2041, a quick trade, right? We can put our stops at 2038. Quick little trade. We can put our TP1 at 2043. Should be a 20 pip move. All right, you guys can go in. Let's see if we can catch at least 20 pips right here. All right, we're up 10 pips. And we're up 18 pips. $17, 18, 19. We're up 19 pips. Boom, TP1 hit, guys. Let me know if you guys caught that. Drop a W in the chat if you're able to catch that quick scalp. I know it's super quick, but I told you guys, we might get into a quick scalp. We had your buy stops. I advised 2040. If some of you guys were late, I told you guys, okay, 2041 is still a good potential entry. We went back to 2041, and in like seconds, we just hit 20 plus pips. If you're able to catch that quick move, drop it in the chat. Big W's, 20 plus pips. Move your stops to break even. And stay in the trade. Move your stops to break even, secure some partials since we did hit TP1. And we're currently now about 30 plus pips, so at 2044. TP2 would be 2045 for 40 pips. W, let's go. All right, we're 1-0 in the live stream. Yeah, that was a super quick trade, guys. I called it out like super quick. While I was talking to you guys, I was just waiting for my confirmation. We're about to hit TP2 for 40 pips. We're up 35 pips right now. And we're up. That's 1 pip away. We're 39 pips away. We're 39 pips in profit. We're 39 pips and a half pips in profit. Boom. TP2 hit. 40 plus pips right there. Secured. Next TP is TP3, which would be 2046. 2047 actually. Which would be 60 pips. Wow, guys, beautiful trade. Right at the end of the stream. Look at that. We're 50 plus pips in profit. We're 50 plus pips in profit, guys. No reason why you should lose this trade. Stocks have been moved to break even. I'd recommend to secure some trades. If you made your goal, which is 2% on a prop firm, whatever, close out on the trade. You're good. Remember, like I said, this was a super risky trade. We didn't even wait for candle closure. It was an impulse move. We're about to hit TP3 for 60 plus pips. We're up 50 pips right now in profits, live on stream. This is the biggest trade we've caught so far in the live streams. I know I called it out super quick because, again, it was an impulse entry. It was a scalp position. I didn't wait for a candle closure, but I did get my confirmation, which was what I needed. I needed a top above that area. TP3 is about to get hit for 60 pips. Let's go. We need 3 more pips. We're up about 56 pips in profit. Haha, nice. I'm out just in case. Hey, let's go, man. I'm glad I was able to help you out today. Yeah, if you're able to secure 40 pips, you know, congrats on that. That's a pretty big move already, especially on gold. Let's see how this 15-minute candle closes in 5 minutes. Do you think we'll hit TP3 on stream? Probably. I mean, it looks very bullish right now. 2 pips away, 1 pip away, and 1 pip away. Boom, let's go, guys. TP3 was just hit on live stream. 60 plus pips. Let's go, guys. I recommend to move your stops to at least, you know, TP1, TP2. Now, you're already securing 40 plus pips. TP3 was hit 60 plus pip. Next TP would be 2049 for 80 pips. Let's keep moving this up. Think we can hit TP4 by 9:45? Probably. 60 plus pips have been secured, guys. TP3 was hit. You know, super successful way to end the week, guys. I love it. That's why we call Thursdays payday Thursdays. Not because our jobs, you know, pay us our salary on Thursdays, but because we smack all TPs on Thursdays. Well, guys, so we were able to catch 60 plus pips live on stream. You know, we entered off of the breakout impulse move of 2041. We got in with the volume, and within literally like less than 5 minutes, we were able to just keep on flying and smack every TP. Now we're on the way to TP4 for 80 plus pips. Live stream won. Everybody won. Let's go, guys. 60 plus pips live on stream. Alright, guys, so I'm going to be ending the live stream. We were able to secure 60 plus pips. So far, it's been the biggest trade that I've caught live with you guys. But I appreciate all of you guys who joined. Let me see what the chat said. Nice about payday Thursdays. Yes, sir. Let's go. So far, it's been the biggest trade I've been able to catch live on stream with you guys. I'm looking forward to continuing days like this. You know, these are the types of trades that I like. Even though it's a little bit more riskier because we didn't get the closure. It was an impulse move. You know, it's still a big W. 60 plus pips in less than 5 minutes. It was a really good scalp. But I appreciate all of you guys who joined the live stream. Remember, my live stream schedule, for those that don't know, is Tuesdays, Wednesdays, and Thursdays at 8:30 a.m. Eastern. I'll be trading gold during pre-New York and during New York session. I appreciate all of you guys who joined. We are currently in a 7-trade win streak with the live sessions, and we're also about to hit our 11-week win streak with the Signal Room. I appreciate all of you guys who joined, and I'll see you guys next week. Let's go.